Hello, everyone, and welcome to another live analysis. So today, obviously, we will not discuss firstly what happened this week. We have five banks down. Okay, so a lot of volatility has been seen since yesterday with the Fed, with the S&P, with the Norge Bank, with the Bank of England. Actually, just now, they are about to release their rate decision, and they're gonna have a press conference as well. So a lot of volatility. You have seen how I assume you have seen. I assume you have seen how the market reacted overnight after the Fed, with gold at record highs, significant indices at record highs as well. In general, there was a very optimistic trading overnight and so far today. S&P at record highs, Nasdaq the same, Asia stock market also surged. So the Fed for sure spooked a bit the markets, along with this unexpected interest rate cut from the Swiss bank, from SNB. It's something that we have seen earlier this morning. So a lot of volatility since yesterday. Before we start and we go through the charts, as usual, you can ask anything you want. Let me quickly provide you a briefing of what happened so far this week, and what each decision, its policy decision, from the Fed, from the CMB, from the Norge Bank, from Bank of England just now, means for the market in the short term and in the medium term as well, and long term, actually until the year end for the 2024. So let's obviously start with the Fed, because there was a bit of a contradiction in the Fed yesterday night. So, okay, pretty much the story is the same one, but we have seen the dot plot and the SEP, the forecast, by saying the SEP, the forecasts, the dot plot, inflation, the economic data so far being hawkish. However, Mr. Powell yesterday sounded more like a dovish instead of a hawkish. So, in contrast with what we have seen from the dots and the SEP, quite key for me, it was the deviation that we have seen in the SEP. So nine, if I remember properly, 9 out of 19 officials forecasted forecasted that there is the need of three rate cuts this year. Okay, 9 out of 19. All the rest were divided. I think five expressed the need of 4 rate cuts, so even higher. There was one with no rate cut, two with 2 rate cuts, and another two with just 1 rate cut. So there was a lot of deviation, but the majority, we can say, it was supporting the need of at least 3 rate cuts. Okay, it was included in the SEP report, and in the dots as well. So there were some significant changes in the outlook, in the FOMC outlook. Okay, but still, the 3 rate cuts are still in the cards, and they are the central scenario right now. So for the remainder of the year, and we have Mr. Powell, paradoxically, I could say, bizarrely stating, it was a bit weird, that that the overall story is the same one, and the Fed still looks the inflation to trend down. So he was more of a trying to give some kind of a reassurance regarding the inflation, even though you remember last week that inflation came once again pretty hot and pretty solid once again. So I'm not quite sure whether that was an attempt to calm down the markets. However, just to finish with the Fed, you should remember that the most interesting, let's say, takeaway from yesterday's policy stance was the media dot that I mentioned earlier, with the central scenario being three rate cuts for the remainder of the year and pretty much an unchanged policy for now. Let me see the questions. Hello, everyone. Yes, heritage. Our so heritage is a it's a colleague of mine, basically a market analyst in Nigeria. Um, he's absolutely excellent, along with all the colleagues as well, Emmanuel, Francois, and Dennis, and etc. So we're trying our best to help you guys. Uh, your feedback is always more than welcome. Feel free to ask anything you want. Feel free to make queries on how we could improve ourselves, right? It's not only about analysis, it's not about only services. Feel free to discuss with us. We always want to say, actually, the number one priority to provide the best services and support possible. So, thank you very much. Oh, we have a few people from India. Welcome, everyone. Welcome. So, I'm gonna quickly share a dollar. Actually, shall we start with cable? Welcome, everyone. Welcome. Welcome, Malaysia as well. Zambia. Welcome, everyone. As I mentioned in the beginning of this session, this is a live analysis. Feel free to ask anything you want. And I will try to keep in mind the chat in my screen in order to reply to anything you want. So, Fed has been covered. So, I'm going to share. Here we are. Gonna share. Let's start with the dollar, even though I was thinking the cable, to be honest, because we have the Bank of England out. So, yeah, let's do that. Let's start with the cable, okay? We have Bank of England decision already out, as I can see in my news feed over here. They haven't changed anything. They held the 5.25% rate. So, okay, the voting was not divided. You know, the Bank of England is doing the voting between the hawkish members, dovish members, etc. They're doing a voting. However, there was a bit of a flip from what was expected. The expectations was for a voting to sorry, let me share. Actually, you can see the voting in on the actual calendar. So how can I share this? Quickly. Here we are. That's the calendar. Here we are. Okay, so have you seen what was expected? Was expecting to see uh, 7 people supporting an unchanged policy, so holding for longer, which is the central scenario once again, holding for longer the rates unchanged. But there was there was one of the policy members voting for a rate cut. Okay, so we can see that that slowly we might see some of the policy members, at least, okay, it's a single one this time, but some of the policy members changing their mind as we move on. However, the thing here, similar to the US, is that the data and what is struggling actually the global central banks, uh, what struggled the central banks is the fact that data, and more particular the labor market, the inflation, the gross domestic product, they're still quite solid, actually significantly solid, and that doesn't give um, the confidence, let's say, to the central bankers to proceed for the time being to a rate cut. Now, let's get back to our chart and see how the markets reacted, or at least the cable for now, into this into the announcement, even though it was largely expected, and we had a pretty we had actually dollar recovering a bit, but here we are. It looks like a rounding top, with the bottom being at the first support of the day. Can you see that, guys? Let me know if you want me to change anything in the charts, okay? I can see your questions. Euro, pound, dollar, yen. Obviously, the majors. I'm on it. Yeah, Vivi, no worry about it. I'm gonna cover them. Sorry. Right now. Thank you very much for your kind words, guys. I want to share these comments and these greetings to my colleagues in South Africa, in Nigeria, in Malaysia, Indonesia, etc. Thank you very much. So, Vui, I haven't forget you. So let's start with the pound dollar. Okay, this is pound dollar, guys. 1 hour chart. We have seen that after the pressure yesterday on the Fed, what we have seen a lot of safe haven demand. We have seen that since last night until the European Open, the safe haven assets were attracting more and more bulls. So gold was significantly high, record highs, as I mentioned earlier. Stocks globally, but dollar drifted to, if I remember properly, 102.80 territory. But in the European Open, so since this morning, with the S&P policy decision, with the Norge policy decision, and ahead of the Bank of England, we've seen the dollar regaining some ground. Okay, so this is a rounding top. So however, as you can see, it hasn't fully formed yet. Always you need to wait for the bottom of the to breach or even break the bottom of the pattern. So let me just I think yellow is not ideal for a white chart, right? Use the blue one. Okay, and the dotted one will be ideal. Okay, dear Vuyi, immediate support level is still the first support of the day, which coincides, as you can see, with the bottom of the rounding top. Okay, and as I can see over here, RSI remains to the downside so it keeps pointing, still keeps pointing lower, right? It's at 38, but keeps pointing lower. So there is further steam to the downside based on RSI and stochastic as well. Look at that. So it entered the overbought. This is stochastic for a very short time frame, 30 minutes, 1 hour, no more than an hour. So this is the stochastic indicator. Already breached the oversold territory, sorry, but it we don't have a reversal, we don't have a bullish cross, any indication that is trying to rebound. Okay, so negative RS, not negative RSI southwards, stochastic the same, moving fast moving average also keep pointing lower. So it seems that there is further steam to the upside, at least to retest or breach the immediate support level at 127.15. So let me just see what's going on. Yes, same in the 30 minutes chart. So now let's check a bit the overall picture. Okay, so let's see what's going on. Let's move on to the four. So just to finish with the 1 hour chart, the RBUY. So support, if it breach and breaks 127.15, which is the confluence of first support of the day and the bottom of this rounding top, this bullish pattern, the asset this is a bearish pattern. Okay, the next support level for the sorry, for cable, it's at the latest bottom. So the latest bottom is Monday's low territory, so 126.80 or even 126.70. But if and only if we have a decisive breakout of this support here, okay? So this is in the short term. Let's see the overall picture though for cable. Ignore this triangle, it was broken anyway, it's done, it's over. So okay. So this is a daily chart. Let me just that was broken as well. So daily chart. Regards to daily chart, dear all, sorry, wrong indicator. I was looking at my trend line. So by connecting the lows that we have seen since the end of January, we could see that there is a nice support, strong support the level on that upwards trend line. So by connecting the higher lows, we could see that the overall outlook for the time being is to the upside. Okay, you see for 2 months in a row, it remained to the upside, posting higher highs and higher lows. Overall, however, um, I mean, if we consider all these, we could see a lot of consolidation. But this is in the long term. For the time being, you should know that this trend line, it will be critical, will be crucial for spotting any reversal in the upcoming days, or even today, or within the week, or within the month in general, the upcoming dates for cable. So what I mean, if and only if we see cable losing steam, breaking and moving below this trend line, then that indicates the turn into the downside, into a reversal, with expectations to come down to the bottom of the year. So 125, 125 actually, 126, 125 territory. So or if and only if we see the asset moving below that level. Fundamentals, though, for the time being, don't really support this technical analysis because we have both banks um, in a in an unchanged policy, with the Fed, however, having as a central scenario more interest rate cuts uh, than um, than Bank of England. So everything will depend on the timing of each bank. Okay, timing and the size of the interest rate cut. So use this trend line, this support level for your daily analysis, just to have the overall trend, the key support level. But yeah, so overall is still in a neutral to positive territory as long as we don't see the break of that level. Let me check my news feed to see whether there is anything coming out from Bank of England. Okay. Um, so let me see whether okay the full statement is out for sure. Let me check if there is anything else. Unchanged policy. Dingra was the one that voted for a rate cut. As they stated in their statement earlier, they are moving in the right direction. Inflation has continued to fall back relatively sharply. Um, the labor market, it looks like it's cooling off a bit, even though mm, that's not absolutely true. It's cooling off, but in a very very slow pace. So they kept actually their 2% target, as I can see here. That's pretty much it. Same story seems for the Bank of England as well. Status quo, as the language in the statement, is more or less a copy of what we've seen in February or even January. So that explains why um, there wasn't a significant, there wasn't a significant reaction in the during the release. That explains a lot because it's a repetition of the February statement. Okay, interesting. So let's move on then. Let's move on to the you ask euro dollar. Yeah, obviously. By the way, guys, no one asked about it, I think, but Aussie is the strongest currency so far today, and Kiwi, bizarrely, is the weakest. Those two were usually moving together. So welcome, Eric from Ghana. Thank you very much, guys. Thank you, everyone. Dollar coming down. Yep. Let me just. This is euro dollar. Let me quickly have at the one hand side. Where's my market watch? Sorry. Oops. So, I've lost my. Here we are. This is okay. And the symbols. And I have my dollar index over here. Perfect. So it's what I mentioned earlier without though presenting my chart. So we had this huge decline. Ignore the gaps, guys. Okay, there are no gaps. Okay, it's just because I'm in a demo account, and that's the reason for that. So decline, recovered, okay, in the European Open, and is a bit in indecision, we could say. Breached the pivot point of the day, didn't manage to break it, turned slightly lower, back to the slightly below the 103 territory, and now it seems that it's run out of steam again. So basically, my dear three effects, this, at least for the very very short time frame, there is a lot of indecision in the dollar. Not quite sure whether this is because we have the PMIs as well, but Yeah, there is a lot of dumbling. Sorry, bouncing between the 103, obviously round number, um, key level, key level, key psychological level actually. So bouncing between the 103 and the 103.30. Let's round a bit, 30 territory. So there is not a clear indication whether if, whether, let me just use the 1 hour chart, whether we're gonna see it extending decline or whether we're gonna see it returning back to where it was at the beginning of the day. So I'm not a bit in line with what you're saying. I can see a indecision for the time being. Okay. What's quite interesting is the fact that this looks to be mm, okay, not an actual morning star formation. It's something to keep an eye on. Something to keep an eye on, but actually it's not. Ignore it. Way lower low, so ignore it. So um yeah, RSI it's flat in the mid level. Hmm. Bollinger's expanded significantly, and yeah, mm, there is a indecision. This is what I can say about dollar for the time being, at least in the intraday basis. Let me try to where's the on my intraday one. Okay, yeah, yeah, some indecision, and not quite sure whether it looks like a triangle, but just something to have in mind, to keep monitor, let's say. Something to keep monitor, right? Not ideal, but bouncing between 103, and so put a note at the round 103 territory, okay? And the latest high at 103.30. They are the two immediate support and resistance levels for anyone who is interested in an intraday time frame, in a very short time frame, with yeah, these two are the immediate support and resistance levels. So we need to keep an eye, even though DRO, we need to keep monitoring also the RSI, because uh, trend lines, trend lines are very useful in such indicators like RSI, because uh, because a break, let's say, below, by connecting the lows in the RSI, you can spot whether the bias is reversing. So a break, let's say, below this trend line could give us an indication that the seller started to gain in the control. So further reassurance, let's say. So for the time being, there is nothing really other than indecision. Overall, right? Let's put the daily chart on. Overall, we have a very neutral dollar. Indeed, returned some losses, some of the losses that we have seen since February, but is still at the low territory that it has been the last 2 months. Okay, so yeah, the 50, it has managed to reverse the 50, to reverse at least the 50% of the losses. It's still below that level, which is crucial. It's the 103.50. Okay, so a lot of indecision. Momentum is still below 50. So indecision intraday, sideways move the last 6 days in a row in the daily chart as well. Set your support and resistance levels in the time frame that interests you, and keep an eye for any breakout. Now, euro dollar. Haven't forget you, dear euro. You. So, euro dollar. So, what we have over here, guys, we had in general, since last quarter and up to the beginning of February, a clear downtrend, a clear strength of the dollar against all the major currencies, and that's why I draw back then this down channel. However, that channel reverted the last 2 months. So we have, as you can see, so here we are. As you can see, we had an uptrend, and actually even retested the mid of this down leg, if I'm not mistaken. Let me put not even retested the mid. Is currently at the mid territory of this down leg, and retested last week the 61.8 Fibonacci level. What's going on now? Okay, this is the euro dollar. Okay, let me zoom in. For the last 2 weeks, basically, nearly 3 weeks, we have seen euro dollar bouncing between the 38.2 Fibonacci level and the 61.8 Fibonacci level. So bouncing between these two levels, even though it has been into an uptrend. So after yesterday's weak dollar, we have seen the euro dollar reversing some losses, getting back to the 109 level. And can you see the daily chart today? Pretty undecisive one. Doji, okay, it's very close to where you open, with two long tails. A lot of indecision, okay? A lot of indecision. Why I'm presenting all this is because I want you to to have in mind, if it interests you, obviously, in the daily chart or even your daily analysis, the this range over here, the lower area of the channel, because it provides you the upper resistance and the lower resistance. A move today or within the week above the mid of the channel could indicate the retest, the breach and retest of 110.20, 110.40 level. So here. So here. While an attempt again to exit the channel, okay? But we needed this a confirmed one, because you can see this is not a confirmed one. It closed below it, but the following day reverted back. So we need confirmation. We need a clear indication, and possibly with the break of these 4x5 times support, 1, 2, 3, 4, 5 times support. So 108.35 level. That such a move below my blue line over here, it will open the doors further down. So for the time being, overall outlook is neutral, with the asset bouncing within the lower area of the channel, and more precisely between the pivot point of the day and the first resistance of the day. So the 109, 108.90, okay, 108.90 and 109.40 level, just bouncing. Now, let's turn into the very short time frame. Let me clear all this mess. Come on. This is the 30 minutes chart. And look at that. Oh, moving averages are pointing to the right hand side. So the bias is neutral. RSI flatten at 44. There is a lack of slope over here. Stochastic is the only one that is pointing further to the downside. So I'm going to zoom in further down to the 15 minutes chart just to find the immediate support level. Looks like a flat triangle. Sorry, wrong line. Okay, not bad, not bad. So a triangle with a flat bottom. So with this way, for anyone that may be a scalper or whatever, you can easily spot that the 109 is the round, is the support and then round number with a closure of the candles in the particular session. Depends where you're what kind of trader you are. It could return back to the pivot point of the day, which is the 108.90 level. But let me just come on, wrong indicator, sorry. Okay, so you can see there is an improvement in the negative bias in MACD and a bullish cross in the stochastics as well. So this decline looked to run out of steam already. Okay, looked to run out of steam already. Yeah, you need to be a bit patient. Possibly, let me just check whether there is anything else coming out causing all this indecision or this caution. It might be a caution ahead of the PMIs later on, even though we have still an hour. Okay, we still have an hour. Jobless claims are out from the US, revised higher. Um, okay, but PMIs are still. We still have an hour away from the PMIs. So, yeah. Yeah. So in the very, very short time frame, that is a pullback. However, we need at least to see breaking the 109 level, breaching in order to breach the pivot point of the day, while a break of the pivot point of the day could open the doors to yesterday's high. Look at that. That's, sorry, Monday's high over here. Come on, which is just slightly above the first support of the day as well. So I'm referring to the 108.70 territory. But if and only if we see the bottom of the day breach and broken. Now, stochastic is in line with this move. RSI is not. MACD turned negative, but it's at neutral, at 0. So there is not a strong indication whether the asset will manage to break that level. Okay. Yeah. Okay, let's move on. Dollar yen. An asset that for sure has monopolized this week the interest. Not only this week, actually, since last week. Let me just. Okay. This is I'm starting from the daily chart in euro dollar. This is in dollar yen, sorry. It's something I mentioned in my article Monday as well and Tuesday. In general, this week the yen crosses were the strongest ones. sorry, yeah, where the struggle was won because we had a significant weakness in yen. So what we have so far today, what we have is a still positive overall outlook for dollar yen. What I mean by positive, I mean that it remains to the upside, holding the gains that we have seen since last week, right? And actually, it even breached 4 months high. Now, if I remember correctly, euro yen, or was it pound yen, that breached 16 years highs this week. Yeah, it was pound yen. Actually, no, record highs for pound yen. It was euro. Forgot, guys, which one was it? Either euro yen or pound yen was the one that breached 16 years highs. So, let's get back to the dollar yen. So holding gains, there was a push lower from the sellers today, but bulls managed to gain back the control and turn the dollar yen at the open price, above the open price. So overall, there is still a positive bias in the dollar yen. It looks a bit overbought, so we might see a bit of a consolidation at this high territory. So you need to keep an eye on any breakout of the 151.80 level because such a break could post another record highs for dollar yen, for euro dollar yen. Yes, in general, as we keep stating in our analysis page, the the yen in the yen we have seen a lot of carry trade situation over there, exactly because we used to have this ultra accommodative policy um, with ac- uh, with actually negative interest rates um, in Japan. There was a lot of cash flow out of Japan towards other markets. That's why yen was significantly weakened. If we just zoom out for since actually since pandemic. Okay, so even the fact that the Bank of Japan increase interest rates, hike interest rates, and they remove, they exit this easing policy, the negative interest rates, that wasn't enough to help the yen. Okay, so yen remains significantly weak against the rest of the assets, and more precisely against pound, against euro as well. So yeah, overall remains to the upside. Let's check the 1 hour chart. So it managed to recover and is at the key resistance area right now. Let me use my intraday setup just to see whether we have any further clues. So recover, trying right now to break the pivot point of the day. Stochastics are keep pointing higher, so that suggests that there is still further steam to the upside, but it looks a bit limited, dear Vuye. So indeed, stochastics are keep pointing higher, so there is further steam. You can see area to be covered, but RSI, okay, keeps pointing higher as well, but the slope is a bit flat. So moving averages, their slope are not pointing higher; they're a bit neutral. So this looks to be, for the time being, a bit of a limited move. Okay, so keep an eye on your indicators, keep an eye on your moving average, and how in 14 minutes, how this 15 minutes, how this candle will close, in order to give us further indication whether it will return back to the highs of the week, or whether it's gonna continue consolidating. So yeah, so uh oh, sorry, I missed that, Ahmed. What indicator that is drawing the support and resistance line? Is it one of... Sorry, I missed that question. Are you referring to my uh, pivot points, the support levels, this automatic tool, Ahmed? Are you referring to that one, or just my usual trend lines? Please specify, and I will let you know uh, um, how to download them. So you're referring to the automatic pivot points. So that's very straightforward. Let me see whether I can share. Well, let me share my screen. So what you need to do is so okay. So in order to find the automatic pivot point of the day, or the week, or the month, you can adjust it as you want. What you need to do is visit our website. Okay, guys, visit our website, click on tools and education, and premium traders tools. Okay, and they are over there. They are mm, a lot of tools, actually, 9, and the pivot point, it's over here in the MT4 MT5 indicator package. I think you need, no, I'm sure actually, you need to log in into my Jeff area in order to be able to download it. It's free, but there is a condition, if I'm not mistaken. You need to have a small you have actually, I'm not sure, but it's free, it's not chargeable. Okay, it won't be charged. There are some terms and conditions, but you won't, it's for free. That's the only thing that is for sure. Now let's get back to our MT5. Keep saying MT4, but it's not MT4. uh, I didn't get that. Raw prices. Yeah, true, true. Yeah, no. If you're a price trader, a price action traded at 3FX, yeah, actually, that would be excellent. That would be excellent. Uh, it doesn't, price action trading is another strategy and is based on each one's personality, but focusing on the candles only, um, is something very, very, very useful on the body of the candles, on the tail of the candles, in order to uh, take a decision. That's just a different approach, which a lot of people prefer, um, instead of indicators. It's basically has to do with each one of us, the personality from each one of us. Um, yeah, so we need to adjust our strategy based on us, right? On our personality, on our the time that we have to spend in the markets. What kind of trader we are, and so on and so forth. Um, Please, guys, I need help. About what, Ayagola? Have I missed a comment? No. Is this something that we can help you with? You're most welcome. One thing you will understand things like a pro. I'm not sure where this is going. I think to Gregory or something, I don't know. But yes, guys, practice makes perfect. Learning makes perfect. Trading is like every other business. It's something that I keep repeating. It's like every other business. Do your homework. Have a trading plan written down. Keep a watch list. Update it every day. Keep up to date. Keep that yourselves up to date with the news, with politics, with economic releases, right? Find your own strategy, something that makes sense to you. Practice in a demo account. There's no need to go live at the very beginning. Go to a demo account until you're confident enough to go in a live account. Until you find a strategy that suits you, you have prepared your trading plan and stick to it. It needs time. I'm not saying that it's something easy. It needs consistency, in its knowledge, it's a constant learning. Okay, if you have a business, right, you're trying all the time to find innovations, to find new things to improve yourself. Like the same is trading. It's a business, so you need to treat it this way. In regards to the dollar into the yen, very good question from Ahmed. Do you see the Bank of Japan rate change can drive yen on short term at least? In short term, you are referring to today or within the week, right? Uh, can drive yen on the short term. If we don't have any surprise announcement regarding an intervention like what happened in 2001, 2002, I'm not remember. If we don't have any surprise, something like that, an intervention. So in intervention, guys, okay, from the bank, has a positive impact to the yen. So that we could see. So back in 2000, let me just 2020. Oh, where? Yeah, 2022. Sorry, over here it was the intervention from the Bank of Japan, which actually supported strongly the yen, and that's why we have seen the yen gaining a lot of ground against the rest of the currency pairs, and that's why we've seen this drift. So that over here we've seen a clear yen benefiting against the dollar. So something that could change the dollar yen to the downside, it would be an intervention, my dear Ahmed. But I believe that's the only thing that it could push dollar yen to the downside. For the time being, technicals, fundamentals as well, they support a dollar yen to the upside. Why? Even though Bank of Japan increased interest rate, right? There is a huge gap between the two banks. The one has the highest interest rate that it had since 2009, so 5.25%, and Bank of Japan has zero. 5.25% gap. So what that shows, it shows a huge yield differential difference. What that means, bond spread is wider between the 10-year Japanese bond and the 10-year US bond. What that means, it means that higher for longer for the time being. Obviously, from a technical perspective, we need to see the break of that 3 years, 2 years ceiling here. So it was retested back in August 2020, July, August 2022, was retested last year, the same period, July to August, trying to extend to retest it once again right now this week, but still below it. However, in contrast with uh, back in 2023, back in 2022, look at that. We have two very strong weekly candles. So it will be very interesting for you guys to keep an eye on how the week will close for dollar yen. Can you see that? Here we didn't have two consecutive bullish strong candles. Neither here. So that implies to a resumption to the upside and increasing bullish bias. Very, very key to that check how we will close the week. 2007. Oh yes, you were, was in regards to the previous question, regards to the pound yen and euro yen. Not quite sure, Ahmed. I'm lost right now. So, never mind. Okay, no. Now I'm quite curious. I need to know where the 2007 goes. About the previous intervention, another intervention from the Bank of Japan. Oh, so I'm gonna Google it. Obviously, now now I feel curious. Okay, so guys, anything else you need? We haven't covered. No one asked for gold, and that's quite weird. I think, um, yeah, I think it might be the very first live that no one asked me about gold. um, yes, Ahmed. Well, yes, you're absolutely right. Was the start of the negative rates. Yes. You are absolutely right. Absolutely right. Yes. Absolutely right. Yeah. I was thinking about interventions, and I was like, when did they intervene? When did? Never mind. But it was the last one was the intervention. The last intervention was in 2022, like I show you. But yes, the last time. So from 2007 up to now, it was the all these years we have the negative interest rates, this ultra accommodative policy from the Bank of Japan. Yeah, guys, anything else you want before I call it a date? Actually, until I have any feedback from you, I'm gonna the highest, yes, I'm gonna cover gold. Yeah, okay, let's do gold. Yes, I was about to do that because we've seen record highs actually, and we keep seeing record highs. The asset, this is the daily chart. Okay, so I'm gonna get rid of those and focus a bit here. Look at that. Actually, it's a record high. It's sustained so far today. These record highs is that 2200 territory. Look at this beauty. Look at this beauty. Moving a MACD, well positive, well above zero, holding gains. I know there is a clash, but it's well above zero. Okay, stochastic, I'm gonna delete it. It's positive, but it's 533 settings, which is for my intraday setup. So I will bring it back up. RSI 37 and rising. Okay, 37 and rising. Strong, decisive candle yesterday. Well, holding gains so far today and actually extending to new record highs. So it breached 2223 territory. Let me check the 4-hour chart. And that's a beauty. Boom. A bit of a correction, some sideways move because it was a bit overbought. A bit of a correction, some consolidation, but holding gains. So that's important. I know because there are doji candles, there are some questions whether going to be a reversal or not, but like who mentioned price action? Who mentioned price action? Was 3FX. Price action. Look at that. Look at that. Boom. Boom. Doji doji. Okay, that one just started, but holding at the high territory of the last sessions. So there's no indication, at least for now, for so far, for a reversal. It looks just a bit of not pullback, sideways move, um, and it's well supported by the indicators as well. Let me just sorry, let me fix a bit my setup. So I would like to check my exponential moving averages as well. I would like to use the 20-day moving average. So, well, just 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 fine. Can you see that the gap between the 20 exponential moving average and the 50 exponential moving average is keep rising? So what that indicates, it indicates that there is still further steam to the upside. Market is positive. Let's see intraday what's going on. 1 hour chart, what we have over here. Yeah, so what I mentioned earlier, guys, a bit of a consolidation because it was overbought. Um, Still holding the first resistance of the day as a nice support level, and even better support level would be the 2196 over here. But yes, well supported. So holding a sideways, actually moving sideways between the first resistance and the second resistance of the day. RSI in the overbought territory without any indication of a pullback lower yet. It might ease a bit, but it's holding above 70. Stochastic, actually, we have a bullish, no, that's a bearish cross, but you see, very choppy. There is no clear indication about pullback yet, nothing. So, and the bodies of the candles, pretty doji, small body candles, they lack out of momentum. So neutral, sideways, intraday bias with the overall bias to the upside. Okay, so and other than the technicals, I would like to also highlight the fundamentals in regards to gold, guys. Okay, have in mind that the fact that the Fed still has as a central scenario 3 rate cuts until the end of the year. This is something obviously that is boosting the investors to this to turn to the gold, because gold is a non-yield asset, non-interest asset. So it's making it more appealing, more attractive for investors. So as long as there are growing expectations about these 3 interest rate cuts, the more the buying for gold. But it's not only the Fed. I mentioned in my previous live, there's a huge purchasing power from the Chinese bank. Because China is in a deflation, right? The bank was buying a huge amount of gold of gold. So this is another factor that supported the price of gold. Okay. Geopolitics also add to the safe haven um, mode, right? But the central banks, and the Fed, the growing expectation about rate cuts, might be the top two, let's say, factors about regarding the gold's rally. Safe haven, Chinese purchases of, if I'm not mistaken, was trillions. I'm not sure. I'm not sure. And geopolitics, which are causing safe haven, the Fed with the growing expectation of interest rate cuts, and Chinese purchases. I think that I'm missing something, but definitely these are the top three. Chinese buying is something that supported the gold, even though we had a strong dollar as well. So that was a bizarre. That's why the correlation was lost at some point, because there was a period that we had strong gold but strong dollar as well, which is something that is a bit weird. And the reason for that is the central bank buying, um, um, as a tool to safeguard, let's say, the economy in a period that Chinese economy is in deflation, facing property crisis, and etc. Yeah, guys, that's pretty much it. Okay, one more thing, one more thing. Aussie Kiwi, last but not least, my Aussie Kiwi. By the way, in the morning, I try to just, yeah, this is still gold. The reason why I'm putting this on, just to give you some long-term support and resistance levels, okay? So key resistance and long-term one though, okay? 2317. Okay. And an inverse Fibonacci as well. So that's just ways to find immediate next resistance levels. 2240 coincides with the third resistance of the day. 2270 as well. On the very next one goes back up to 2300, 2317 to be more precise. Okay. Yeah. So Aussie. I don't want to lose that. Let me put Yen. Oh, ZQE, sorry. Uh, consolidation. That's interesting. This is the 1 hour chart, dear Ahmed. A bit of a consolidation, but interestingly, the parabolic SAR have switched, um, suggesting that there is a strong ceiling at this area over here. RSI is flat. Okay. Okay, considering that Kiwi is the weakest currency right now and Aussie is the strongest, there is some steam further to the upside, but it looks that it will just return this top over here. It won't last for long, so you need to keep an eye on this resistance over here. Let me check the overall picture. Clear uptrend since the mid of February. Momentum to the upside. So there is a strong ceiling over here, but still a very positive overall outlook. You see, well supported by moving averages, well supported by parabolic SAR. This is a daily chart. Um, RSI remains to the upside. So overall picture, my dear friend, is still positive, with the next ceiling to be, actually it needs to break that level, because that used to be a resistance level back in October. And if it brings this, if it actually breaks that level, then the doors open for October's height and the 109.40 level, because momentum is also strong. Intraday, though, it looks that it's a bit neutral. Parabolas are shifted, indicating that it will not manage to break that resistance level. There is a mixed indicator situation over here. RSI already started turning lower. Let me just, excuse me. You see, RSI already uh, reverted away from the overbought territory and is back below 70. Keep an eye on the floor of the RSI, because for the time being it's only consolidation in our price action, consolidation in the RSI, as you can see, and a mix, and in contrast is a stochastic which points upwards. uh yeah. Mm. Yeah, just keep an eye. For the time being, it's sideways, strong ceiling at the first resistance of the day. So it looks like it's running out of steam. It won't manage to break that level. But have in mind that this is a nice range to be closely monitored, because a break of 185 20, it could retest the support of the day, the pivot point of the day, and the previous support as well at 108.30, while a decisive break with a follow-up candle, okay, always wait for confirmation, um, it could extend, it could help the asset extending this resuming, let's say, extending this long uptrend uh, to 109 or even 109.40. So you need to be patient on that one. um, this consolidation for the time being, it looks to be just a bit of a correction, because it was overbought. It was overbought. Look at that, overbought. So it needs a bit of a sideways movement as a correction. Nothing is pointing to a reversal. So yeah. Okay, guys. Yeah, all of you should be very careful about everything, guys. Trade what you see, not what you think. Okay. And if you're not sure about the trade, don't take it. Just stay out. Guys, I'm gonna call it a date. Thank you very much for joining. I'm gonna do a quick scan in the news feed. Bank of England, as expected, with the twist in the bank of on the voting. We discuss as well the Fed. We discuss the fundamentals behind the gold, behind the dollar, behind the cable as well. We haven't discussed the CMB, the Swiss bank, which unexpectedly rose, but just very, very briefly. Um, uh, Sorry, very, very briefly. In Swiss, the inflation has dropped remarkably, and that is what had pushed the CMP to proceed with an interest rate cut. And actually, they were quite dovish, stating that there is further room to the downside to further rate cuts in the upcoming quarters. Yeah, that's it. I'm gonna call it a day. Thank you very much for attending. Hopefully you enjoyed. Your feedback is more than welcome. You can find us via email. You can send us a message in Facebook, YouTube, Twitter, LinkedIn, and Instagram. Feel free. Thank you very much. Have a great day ahead. Take care. And see you again next week with the PCE, if I'm not mistaken. My colleague Michaelis will host a live, yes, for PCE. Okay? Thank you very much. Have a great day ahead. Bye bye.